Hello everyone. Hello. I just wanted to do a quick sound check. Make sure that you are able to hear me right now. Get everything up and ready to go. Awesome. Great to see you. And thank you for joining me. We'll go ahead and get started. Welcome everyone to the PivotBoss monthly market outlook for January 2019. Our first one of the year. I wanted to wait for at least the first few days to kind of shake out to gain a little bit more directional conviction here before hosting our first monthly market outlook. If you're new or this is your first time, my name is Frank Ochoa. I wrote a book called Secrets of a Pivot Boss. You can find more information about PivotBoss at pivotboss.com and also pivotbossmasters.com. On YouTube, PivotBoss TV. And what we're going to be doing here, this session here, is taking a look at some yearly pivots, some yearly PivotBoss bands, which show value and standard deviations of value. And then we're also going to look at several candidates as well. Because there's some interesting patterns that are developing here. A nice bounce we've seen so far in the markets, but is this bounce going to last? And that's something we'll discuss here from a higher time frame perspective. Number one, let's take a look here. I'm going to bring up the ES over here in Thinkorswim. So just to kind of bring it back a little bit, the last time we had our monthly market outlook, it was December 3rd, I believe, right here. That was the day. And the idea at that point was this is likely another opportunity to bring it back to these lows, and then perhaps any rejection there could bring us into the end of the year. Obviously, it failed to hold there and had another major continuation downward. That was huge. This was a major recovery here, this pivot low. It's a very strong low. The only problem I see is just it happened during the thickness of the holiday season there. And, you know, judging to see if that had enough volume and oomph behind it to hold is still something to, you know, I'm watching for. But for the most part, looks quite bullish in the near term. One thing we talked about here is this FOMC key level right here. That is the December 19th FOMC key level. The market went off and away from that level, found a strong low. So early this week, the second here, what we were looking for was any pullback to be held, perhaps at 24.50. It held at 24.38.5 for a shot at rebounding back up and hitting that 25.86.5. And so far, that's kind of played out very nicely. When it looked like maybe the stops might come out, failed new low came to the rescue and a huge continuation day occurred. So in the near term, our outlook was that this was a strong enough low to at least bounce price back to that pink line there, which is the midpoint of last month's range. That's the top, that's the bottom, that's the midpoint. We got it. So now we have ourselves a new key range to put on. Additionally, we were looking for a bounce that could take us as high as this FOMC key level, although, you know, we missed this one. This one was reached, I guess, or maybe barely missed. I think that was reached. And then this one right here still to be determined. But for the most part, whenever it's offered initially, when it comes back to it, it's also offered. This market still doesn't appear to have found its major footing, but at the very least, if this is a strong enough low, we could bounce back down or drop back down and bounce back up off that zone and maybe hold a little bit down here and develop for a while before something more significant occurs. That would be a good case scenario. But for right now, the fact that price has hit the midpoint of this key range gives us enough to work with to create a new key range if we wanted to. I think that is what this move was designed to do. That move was a sell-off from the high to the low, back to the mid, and now it gives us a new key range with levels to watch for the future. And that also tells us that maybe this low is very, very important, because now after hitting this midpoint, these are the three most important levels If we come down here and do something like that, that might be a huge buy that leads us not only to short, but also medium and long-term targets down the road. So something to watch out for here, but we have hit the midpoint of this impulse sell-off. Gives us a good key range, but it is also retesting prices below or at prior support. And again, that's an area where bears may want to defend for a shot at rotating this thing back down. So while we may have a little bit more upside, it's going to really have to prove it to kind of extend this gain. This is the low for the year. This is the high for last year. We went way through it and hit the 50% target here. This is our first time trading back above this level since Fed Day back in December. So are we going to be able to hold 25.29? You know, failure to do so, I think, again, leads to some degree of a pullback, whether it's back to 24.38. Maybe it's as low as 2400 or 2300, who knows? But it's going to tell us right away if we can't start holding above or keep holding above the 25.29s. So right now, the way this looks, you know, it's still pointing down. Nothing has changed. Nothing has changed. This is a good magnitude bounce, and it's the same type of thing we had here and the same thing we had here. The bear market bounces can be more significant and more volatile than a regular bull market move. You know, this is a bull market move, just normal and easy, you know, nice and normal and easy. But when you have a bear market, you know, sometimes these gyrations are much, much more significant. You can see how just in a few days, 5 days up compared to this. So that's to be expected. Are we going to pull back now? Now, I wanted to show something here in Visual Trader, because if you take a look at the ES in the higher time frame, and we'll make this a weekly chart. This is the weekly chart with the floor pivots. So those of you that have my book, Secrets of a Pivot Boss, I talk about the floor pivots in there. I also talk about the yearly pivots, and the yearly pivots are different than what we usually look at, which are like daily or weekly or monthly. These are yearly, so it uses the previous year's high-low close information to generate the pivots for the new year. And so we just finished last year getting as high as this level, as low as that level, and then the close was here, or was it here? And so that gave us pivots now that we can use for this upcoming year, which are these pivots here. So now, what you'll notice is in an uptrending market, obviously you have higher value relationships with the pivot range like this, and typically speaking, every pullback is a buying opportunity. It's a buying opportunity, it's a buying opportunity, right? This pullback was still a buying opportunity, and they even tried it late here until it fails. Until it fails, and this was a failure. It failed, it broke back down, and that is very, very important, because now what you also see is a higher value pivot range. Higher value relationship means that this pivot range for the new year is higher than the previous year's pivot range. And so it's overlapping higher, but it is higher. And what happened was last year it closed below that level, and now it's rallying into that pivot range from below. This is one of the most bearish conditions that you can have. This is a trend break type of condition that can just lead to a major bloodletting out. And so this is something that's very concerning moving forward. And remember, before this entire thing happened, we were here on the October 1st market outlook saying that if this thing were to drop, it's going to be right here. It's going to start in October, and we could theoretically drop as low as the year's lows. So we saw this one here coming, right? December was hard to predict, but I mean, obviously it had a huge continuation. This is along the same lines of that. This is this next wave of this. You know, if the way that this looks right now, it's a change of bias here. It's overlapping higher, but it's broken the bias. It had been higher, 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 and now this break can drop it much lower, and perhaps we go lower, lower for a little while. But this doesn't look good, and so this is going to be something to watch. This isn't, because this is a weekly chart, you know, it's not something that happens today or tomorrow and is done, or by the end of the week and it's done. You know, it could mess around up here for a week or 2 or 3 before it makes its move, but for the most part, this is the zone to watch. And if it can't find legs above 2600 soon, because we could still get up to that level, right? If we can't find legs above it, then perhaps that is a time where we see a major retest of this low at the very least, and that S1 right there on the yearly would be the level to test, you know, for maybe a bounce back up. You know, so this is going to get very, very interesting moving forward. But I wanted to show the yearly pivots in that scenario there. The other thing that I'll note is that the pivot range is very narrow. This pivot range was wide, sideways range. You know, you have a wide pivot range here, sideways range. This was more narrow, and we got trending behavior for 2 years. This one's narrow right here. And that narrow range, again, suggests that we might see more volatility ahead, more range expansion. And if it's to the downside, you know, how far do we go? Normally, when you have this type of break, you don't normally just get the S1, but you usually go at least to the S2, and that's pushing you back toward 2K, between 1950 and 2K. That would be huge because you'd be taking out all the gains all the way back to the election, 2016 election lows. Is this just the beginning, right? And so that's what's something that I'm definitely going to be watching out for, because if that occurs, obviously, you know, bounces like what we're seeing right now is when you put on protection. Perhaps take some profits if you have profits in certain things, and add protection or add some downside exposure. And so that's kind of a theme of today's session here, is just on these bounces here. If this turns out to not be the bounce again that continues onward, then you'll wish that you had some puts that you had put on. Here's the NQ. You take a look at the NQ, you see the very similar price action here. This is the weekly chart again. Each of these candles is 1 week. This is the yearly pivot range, and then yearly pivot range from here to here. So again, another higher value. This one's completely higher, but it closed the year here. Now it's coming into the pivot range from below. Again, we haven't seen that type of behavior in over a decade. No, actually we did see it recently, my bad. In this one, we hadn't seen it in the ES, but we saw it here. But it usually has some sort of reaction. See, right now we haven't even tested it just yet. But you can see right here, this was pivot range that's higher. But it closed above it, and then went offered down below it, offered. Then it came back above and made it support. This one closed below it and is coming into it. So that one's a bit different. This one's more significant in the way that it's showing. But again, any bounce, even as high as 6,800, the top end of that range, because that would be the midpoint, anywhere in that zone could still be an opportunity to sell this thing down big time. And how much weakness comes from that? Again, do we get a big old change of trend that takes us all the way back down? I don't know what it would take for something like that to happen, but you know, something to keep an eye on. These usually play out nice. Now, again, this all could change if next week this thing were to rally through here and it breaks and is able to hold above 6,800, right? Then the idea starts to change. But as long as it's below that zone right now, the bias is likely downside until it can prove otherwise. So that's something that I'll be looking at right there, is the ES and the NQ. YM, very similar again. You can see the overlapping right there, overlapping higher value relationship, closing below it, pushing into it today, and dropping back below. In most cases, you have higher value, you continue higher. But if you have higher value and then you close below it and run and open below it, it's usually a kiss of death type of pattern. You know, where it drops down, it comes back, kisses it one last time at 24K, and then goes all the way back down to say 19K or 20,000. This would be S2. And again, in something like this, I would say S2 would be a great target in most cases on expansion like that, and that would take you right back to the top end of this range. This right here is the 2016 election lows. Huge move. And to come all the way back would be fitting. So again, I'm not usually one to ring the alarms and always be bearish, but these are some things that you don't see often. Again, when's the last time I've seen that? It's been a long time since it's looked like that. Not in the last 10 years. And so it's rare in that it's at least been a decade since this thing has formed that. And I could probably keep going back here and see what else we have going back. Here it is, right here. This is what it looked like in the 07, 08 financial crisis, right? It happened right here. This was higher value up to here, and then it closed the year right there, below it. So it drops first, a couple of angry times, it comes back and hits it from below, and then this was the major leg. All of that was the lead-in, and that's kind of what we've seen now. This right here was the kiss of death that broke the uptrend, and it just gave it back. So that's what it looked like in the YM. If you go back to 07, 08, and if you come forward, it's the same type of deal here, where you've gotten, you know, a bit of weakness here. You have this, you know, maybe it comes down, maybe it hits it again, but does it do something like that down the road that really gives it back? So again, we're kind of in a little bit of a danger zone here, but this can be something that continues to develop over the next 1 to 4 weeks. It could be sitting here messing around in this area, so it's not something that has to happen fast. So I did definitely want to talk about those right there with regards to the higher time frame pivots. The other one I wanted to look at was CL. The yearly pivots here with CL. Previous year did really well off these for the most part, and here we are right here where you have higher value relationship overlapping higher. This one closes below it, opens below it. Very, very bearish. This is a clear top here. This has been a pretty significant bottom, about as good as it got, and of course it got within, you know, 30 something ticks of reaching our top end of our support zone. We had 42 and as low as 38, but 42 is where this was at, right? So we knew that we might see some sort of bounce from there, and it's been pretty decent. What I'm looking for is, when is it going to find the strong enough low to give back 50% of this move? Because from that high to that low, if this low is in, we have a good shot to come back toward 60. That's where the midpoint is, and that would give a large key range now to work off of moving forward. So this one right here forming a really strong top, really strong low for now. Wondering if it can bounce, but in the weekly time frame right now, not looking too hot. It needs to be able to hold above the 47. So if you look at the daily chart here, you can see the clear downtrend has been intact. Look at S3 here on the PivotBoss bands. VWAP trending downward as well. You have your trigger zone for the PIMAs coming into play multiple times. And today, failed new high. Tried to hold above the previous session's high. What is that? 49.22, something like that. Pushed beyond it. Closed back below it. Not quite done going up, because this is still higher highs, higher lows day over day, so the trend is still up, but it's coming into prior support. It came back into the 49.17 zone, which is what I mentioned before, a CVPOC on the 5-year time frame. All of this looks like another round of weakness is likely coming, but this could be a strong enough low that any drop could be a higher low, say off 44s, and maybe it tries to bounce and grab this midpoint, or whatever the midpoint was. It was near 60 from here to here. So I think this one has some short-term downside, maybe 4 points of downside, maybe a little bit more, but tomorrow it needs to really start showing some sort of rejection, and the 49.17 to 49.20 zone still looks like a good zone to watch. Everything's still pointing downward in this one. Now there has been some nice ETF action here with iShares here. This is the biotech, some mergers and some things happening, buyouts, whatever it might be, and huge moves. But for the most part, this has been really quick. Needs to hold 100 here, and the top end of the range is still 115, 116. But for the most part, some of these ETFs here, they still look so beat up. EEM is one been trying to look for a while to see if it would finally pick up a little bit, but it's just not doing it. It is holding a major zone of support, which is very important, and that's that $38 level. That's a huge level to hold. But everything still looks weak. But some of these are starting to turn around in terms of at least some of the Chinese stocks, or show signs of wanting to turn around. But some of these still don't look very good at all. If you look at the tech sector here as well, you can just see how bearish it's been. It's trying to hold this low now, but it has also the overlapping the higher value relationship, which has failed. So you have higher value, it closes below it. This is very bearish, so it could get worse. USO down big. XLE, right, down big. Not showing the type of strength you'd like to see. XHB. This is another one that you'd wish it was much better, but it's not. This is the home builders, right, dropping significantly. Because when they're hot, it seems like the market's hot. When they're not, it's a tough year. And XLV right here, this is one that has been hot this entire time, and then also took some heat here recently, dropping 96 to 80, 82. So these markets right now, they don't look the best right here. And usually after a series of down moves, you may find a pretty strong low that says, okay, this is it. And I haven't felt that at all. I haven't seen that at all. The one time was obviously the one over the holiday break, which was pretty strong. But even then, it's hard to believe it during the holiday sometimes. So at least remain in the low. It's just, right now, they just don't look the part. And so whenever you get a move like this big pop-up right now to 87s, and it's testing this from below, this is a good spot to put on some puts in most cases. So I wanted to take a look at some charts. For example, Atlassian is a really good one. This is Team. And again, this is a daily chart right here. And one thing you'll notice in this chart is that price is sitting right at near all-time highs. There's 95s right there. You got a nice little rejection here. This red line right there is R3, so it's 3 standard deviations above VWAP. This is VWAP, and this is right now this is 6+ month VWAP. Anytime it goes flat like that, what you're looking for, whenever it flattens out here and it flattens out here, you're looking to bat the ball back down. And then when it comes down here, you bat the ball back up. You take some off at VWAP along the way, or however your target methodology is. But this one right here, again, is another one that's near highs. And this is what a lot of stocks did before they just took out the lows yet again, right? There was plenty of stocks that did that right before they got whacked. This one is one of those that is 3 standard deviations above value, for the last 6 months, that's a great spot to take some off or to start selling calls. So I like to sell call credit spreads up here. And let's see, looking at, so the January expiration is 11 days out, and that's a good time to sell some of these. So usually, you know, you're looking at this right now, 11 days out, there's 95s and there's 100s. So you can sell the 95 calls, and then also buy the 100 for protection, right? So you basically have a spread there. And that would be a good way to go right here. You can also do the 90, 95, so you'd be slightly out of the money. But you got to make sure that that thing closes below the one you sold 11 days out. And again, that's one way to go. Put spreads is another way to go, where say you buy the 90 put, and then you could sell like the 80 and have a spread, or an 85, or whatever the case might be. So this one's a pretty decent one right here in terms of being oversold right now, or overbought, and what could be a counter trend bounce in a bear market. And if that's the case, that would usually suggest some degree of pullback. How much do we see? I don't know. If it's just to the 8 period, then you know you got at least back to 88s. If it comes back to value, then you got about 80, and anything more than that is just gravy. So this one definitely has a good shot right there. That's one to watch. Another one here for the short side was Spotify. Spotify's looked really good here from the short side. You can clearly see right here the overlapping lower value relationship. There's your pivot range. It's spent 2 days in the pivot range right now, and again, not able to get above the 125s. That's another one right there to consider, is anytime you're rejecting the key zone like that, if it can't get above 125, that might be the in the money put to buy right there. Now again, I'd go longer than 11 days out. The next one would be February, 39 days out. That's a good one right there to work off of. And working off that one for, say, the 125, I know it gets a little pricey. It's at 12, what is that, 1240 mark right now. But there could be a spread as well. The best idea typically is at the money spread, say 119 to 115 or 119 to 1 whatever. And that would be a good way to go. You can also do an out of the money spread to get a little bit more bang for the buck there, as long as it goes in the money there. So that's a good way to go anytime you're looking at something continuing downward. You wait for that counter trend bounce, you wait for it to happen inside the trigger zone of the PIMAs or at the pivot range, and then that provides a great opportunity to sell this thing right back down. So this is a good one to watch out for. That's Spotify. Another one, LULU. LULU's one to watch. Again, this one has been very, very bullish for some time, and then it got hit just like the rest of the market. But what you see here is major support. Over here you see a right side, over here you see a left side, and up here you see a head. So you have that giant head and shoulder type of pattern that's happening. And we're now testing value from below. So that's VWAP. So that's composite VWAP over the last 6+ months. And every time it's come to that level over the last couple of months, it's been offered, and now it's there again. This is a great spot to watch. Again, 135 puts for this one could be a great way to go, or we can do anything like what we just mentioned for Spotify, where you do call spreads, call credit spread. You can do a put spread of some sort, out of the money, 35 to whatever. But this one is a great one right here to watch, as one that has just gotten a big bounce and may see the rug get pulled out from under it down the road. A close above 135 would break that idea. So tomorrow this thing could just rocket ship through it and close above it and hold, and now that idea is done. So this one is not kind of getting married to the position if it starts to push above 135s. But for the most part, this one has a great shot to return back down. How far down? Who knows? At least 125 might be in a good target, but it could easily see more than that as well. And think about it this way: if this is the one that leads to a break of that neckline, then that could be the one, right? And all of a sudden we're down here filling gaps and working our way way lower. So this is LULU, a great spot right here to watch, especially if you want some short exposure. GoDaddy, I got a lot of shorts on right now in terms of ideas, but I'll get to the long ideas here in a moment, and then if you all have any that you'd like me to check out, I can do that as well. This is GoDaddy, 68's big time resistance here. It's been consolidating at lows. Lower value relationship here, a big rejection day today. This thing is compressing and it looks like it's ready for another leg down. Again, if this one were to drop big time and then at the same day rally back up like that and throw off a huge wick, maybe it's ready to go and do some damage to the upside. But right now this market has been down. Nothing's really changed. The Fed has gotten appears to be more dovish, which is good, but there's no real resolution on the China front just yet, and that's really, I think, what's hurting a lot of these stocks even more. So this one right here continues to hold below 68s. With the way it's building out, I think that suggests more weakness. Maybe we're coming down here to fill the gap at 56. Maybe we get down to 50. So this one is one to watch again as another downside potential candidate. Couple more. It's like I'm very bearish right here. This is Home Depot. Home Depot here has formed another cycle high. It's had these cycle lows. Again, this looks just like LULU, where it has gotten to a cycle high here, and you know, this might be the last good shot before it does something like this again. You know, this one has seen a lot of resistance since it formed the highs in September, and it just doesn't, I mean, anything can happen to the upside, obviously. I think it has a really good rejection that it's formed here. That's pretty strong, but it might need to do this first. This market, I don't know if it's strong enough to just lift out of nowhere and just keep on going. So we'll see. But I think right now, short term, this might be a near-term cycle high that leads to another round of weakness. And let's see. Let's look at KSS. This one's retesting 70 from below, kind of a head and shoulder pattern. I like this one because it had major resistance here around 70, was prior support, a lot of rejection tails here in that zone. Not bad. I like some of the other ones better here, but that's not a bad resistance level if you actually look at it here on the higher time frame chart. You'll see right here a nice LVN, kind of a B-shaped profile from here. That would be a double distribution type of profile. You see it here and here. And so we just seen this thing transfer from the upper distribution of trading, and then it went down one notch, came back, and now you know, it has to probably trade some more in here. So I think this one has a good shot to drop back down toward 58 from the 70 level. Nice LVN there. And again, 70 to 60 could be a nice little spread, or you know, something else. So that's always a good way to go, is when you're basing it off market structure. That's a decent one right there. I had a couple of long ones to watch. This is SFIX. Oh, I'll get to HCA here next. SFIX was really good here. 18 bucks. That's been a really good one because it took out these recent lows here. This is the IPO over here. That's where it IPO'd and bounced. We got a lot of these rejections. So it came below here, played a little bit, and is getting its move above, back above that $18 level. That's very, very bullish the way that that's happening. That doesn't mean it can't keep on going down and reach zero. But as long as it holds 18 now, this thing is good to go. That's saying a lot, I think, in this market. This is very bearish the way it's dropped. This one had a huge move up. But now the way that it's reclaimed the $18 level, I think if it can continue to hold it here, it starts to work up toward a gap fill. That puts you at about 26. And it could get you even higher, say, into the LVN at 30. So that's not bad, 18 to 30. And that could, again, that would take somewhere around 3 to 4 months to get to. 3 months. But the near-term move, as long as it holds above 18, good shot to go higher. So that's not bad right there. Hi, Veronica. Good to see you. Here's HCA. You see right here, this is a good little spot right there. I like when these have kind of the expanding triangle or expanding wedge, because it's very predictable at times, and you know, coming down here and taking out this low the way it has and bunching up down here, it's building up energy for what could be a move that happens like this. 126 is still very important right now, so it could continue to mess around below it, but as soon as it pops back above, it could be ready to go. In the one that I have, that's one that's similar, that looks just like this, but this is forming at a high. The other one's forming at a low. Because if it can't get above the 126 zone, or that level right there, you have this lower value here that's in play, and now you start to come down here and work toward a gap fill and the top of this prior market structure. So this is kind of the zone where it kind of raced through and it held up here. And if this is the moment that it's going to break and it can't get back above 126s, then we probably do that. But right now it's holding at the very last portion where it can hold before it tries to bounce back up. And one that looks like this that we recently had in the room is CCK. And this is the one we talked about last week. And you can see this kind of expanding range here, and then you had the lower expanding range there. It took out this low here, and that's the day we had the buy signal. You can see the signal there. And I mentioned that I just love when it does that at the lower edges of these ranges, because it usually snaps back to value very quickly, and then it has a shot to work its way to the top. And it does it time and time again. It takes out that high, then it comes out and takes out this low. This takes out the low, and then it comes out here and takes out the high. It's just, it can be very, very predictable when it does that. And so this is one we had from this past week, and that one worked out really well today, up 4%. Let me see. This is INCY. And this is another one on the short list. A lot of shorts coming up, so I'd also be careful about that. But this is one that has held off the 75s for a long time. 60 down here, and it's traded the 60 to 75 many times now. Back down, back down, back down. So this has been a really good trading range. I've been waiting for this one to break out, but it just hasn't done it. Instead, it's bounced really nicely off the lower range a couple of times, and dropped here since I've been watching it. Over here, 75, that's where it is again. That's the highest level it's traded in a long time. In the room today, we were looking at this one as a short candidate. So again, you can buy the 75 puts here. And there's also the 72 half puts as well. So 72 half puts. And then there's also the call spread idea. So the call credit spread, where you say you know, you sell the 72.5 call and buy the 75 put. That was trading, I think, even money today, something like that. 11 days out to expiration on those credit spreads. But the goal here is for this 75 to remain intact as the high. Maybe it peaks a little bit higher tomorrow, but as long as it remains the high, then look to snap this price back to 65.85, and that is value, because usually it'll come back to value very quickly. Boom, 4 days. Boom, 4 days. Right? It drops back down very quickly. You got too low here, bang, back to value very quickly. Too low here, bang, right back up. And so that's the goal with this trade. I don't know if today was the top just yet. Didn't look like a topping day, but it is right at the price. So it's one of those that you have to kind of decide the trigger, but I think tomorrow will give us a much better feel for if it's topped or not. And I think if there's any movement back below today's midpoint, that could be very telling. And we could be looking at 65.85 very soon. So that's another sell or short candidate there that I was looking at. Some of the one on the upside, let's see, IQ. This is one that was, you know, the Chinese list early on in the year that worked out really, really nicely early on. One of the traders in our room had us tuned to that one very quickly, I think in the 14 or 16 zone when it was already starting its run. That was an awesome move. It's given all of it back now, but what I like about it is that it looks kind of like Stitch Fix, where it's taken out these IPO lows or gotten very close to it. This one took them out, and now it's had 2 strong days up. Obviously there's still this overall downtrend. There's still the lower value, so the downtrend is still the most likely direction. But we're done hitting these lows unless we go lower. Any pullback that's a higher low now could be a huge change of bias catalyst for this thing to return back toward prior pivot highs or lows up there, which would be 24s. So it was this prior pivot, lows there, and then it became highs and it dropped. That would be a really good target here for this one from current levels, and one to watch here, but it needs to hold 16s. If it can't hold 16s, then the trade's over for that one. So that one's one that has a shot to turn around, but admittedly everything still looks bearish on this one except for the recent 2-day pop. It just needs to hold that pop. Here's CC. This is a longer term candidate, I believe. This one's not bad. Again, is the market going to bounce or not? That's going to be the big one to think about, you know, because rising market lifts all boats here. This one has been trending down, 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 down. Look at that. Into the pivot range, sold. Pivot range, sold. Pivot range, sold. Pivot range, sold. This time it took it bid and it's running. And now you can see the next month's pivot range is already tracking higher. It's broken this cycle of downtrending markets. Any pullback now may be bid for this thing to change direction. And so 30 bucks now becomes a very important level, because if it pulls back and holds 30, or say 28 to 30, we could be working our way back toward 38 to 40 over the next 2 to 3 months. So this is an early change of bias candidate to the upside. And another one that I know I'm going through a big list here, but that one is DOCU. This one, again, another one that had an IPO late last year. I guess that was May, so middle of last year. Higher high failure, back to support, tears through support and drops back down. Rounded bottom, all building out. It's at value now, so it's shifted value down to 40.85. Sitting above the 36s here. This looks ripe for a mark back up. I don't know how high, but you have an HVN right here at about 53, 52 to 53. You also have 50 here. But this looks really solid. I mean, it's built out a big enough range here. Maybe we need a little bit more energy to build up, but anytime you build up that much energy, you usually see a move back to the prior pivot high. That would take you to between 66 and 68 down the road. Again, this looks like one that's building up for, you know, a 6-month type of move, 4 to 6 month type of move up. Maybe even less, so we'll see. But that one doesn't look bad at all. Roku. Man, Roku got away from me. That one is incredible. I love this one last year. Obviously, I had this one as a double candidate, which means I thought it could double within the year. From 30 bucks, mentioned it could double to 60. It went beyond that and then gave it all back. Gave it all completely back. Price did, not me. The last time I was long was from here, and then got out there and then was looking for a place to buy and thought, man, this is not going up. Right here, this is the kiss of death gap. When it closes on a high and gaps way down and drives, that day we knew right away it's likely going to get crushed. Down here, taking out this low, 30 bucks is the best level on the board here. 27.50 to 30 bucks. Just a great zone. It got below it here, popped back up a little bit, and man, I'm bummed I didn't get it at 30. I really wanted it at 30 again off the zone, and didn't think this would happen so fast. This was a 25% day, and that followed yesterday's huge day up as well, where it rallied like 4 points on a 30 handle stock. So huge moves here. And what I mentioned to the room earlier today was that the fact that it's bounced off the $30 level again, so here's 30 bucks, suggests that we're at least likely to rally back toward 48s or so. 48 right there. You know, that's kind of the top end of this zone. And we might see some action like this. But I've always liked them and what they do. That's why I was so vocal about this before. And I think that's what today was all about, was them showing they had big numbers again, big usage, stats, and the whole thing. And anyways, huge pop. So I really like this one off of 30. I think it's one of those you buy off of 30. And then at some point, do we come up here and fill this gap? That's at 60. That would be a double again. So I think this thing is eventually headed higher. The way that it's moved up right here, perhaps there's some sort of counter trend pullback that happens. It'd be hard to see this thing just continue higher another leg. Anything can happen, but I think we kind of pull back toward today's mid or something like that in the near term, and then try to kind of continue higher. So that's a very solid move. Very solid move. And it's definitely on the list there. And another one that's a good one that's bounced here recently is SLB. SLB is huge because it has 20-year support. Alright, here's 20 years back. Now 20 years ago takes you over here. I was still in college at the University of Texas there. Champions of the Sugar Bowl this year. Very proud of that fact. Not very proud of my Houston Texans and the egg they laid the other day. That was pretty bad. But yeah, this goes back a long way. That's where that 35 goes back to. Resistance, support, resistance, resistance. It broke away and rallied, came all the way back to it, then rallied higher, then came all the way back to it. So we knew in the room that 35 was a big area to watch for a bounce. And the bounce has been fast and furious. It's already back above 40. It's been pretty solid. It might continue to hold down here for a little while. But these 35s they look really good. They look like it could at least get a bounce back toward 50 on the low end, and then start working towards 60 just on a medium term end, right? That's where this drop off occurred, through this support. Remember, this was a great spot to buy for years. It gave it up big time. Normally you come back to that spot. That's 60. So from 35 to 60, again, not quite a double, but not a bad return or potential return either. So this one is looking like it has big time potential to bounce down the road, and it's already starting off pretty hot right now in the lower time frame here. Here's the daily chart. You can see how precise that $35 level was. It hit 35 even, 34.99. This was 35.02, 35.26, and then it rallied. So that was huge. But any pullback right now, any higher low could easily fuel this back up. So that's a candidate for a longer term is SLB. And if y'all have any last requests, please let me know here, because I'll be finishing up here. But I have this one right here, which is PayPal. That's PayPal. What I wanted to show is PayPal in this one. And what you'll notice here is the bands. Here, let me take these off for now. These bands right here had been wider, like this. And that is due to the fact that it trended this entire period before. Wide spread of the data, so you have wider spread of the standard deviation here. But look at value go flat, right? Very, very flat. And then you see the compression of the bands come inward, compression come inward, and now they have renormalized to here. That's PayPal. It is compressed for a full year plus. This is November, December, all of last year, now January. It has gotten all the compression it wants, and now it's about to release some major energy. The problem with this is that this doesn't really give us any directional conviction or directional bias. We have to kind of figure that out ourselves. And really, it's hard to tell. It could go either way, right? That's how a market can be. This one right here has been up, had a huge phase up in 17, all sideways in 18. Does it give some of that back? Does it give it back? Because you can definitely see bears defending here, but also down here it's been very bullish as well. It's going to be very interesting, but the compression is here. It's flattened out and normalized, and what that tells us is that we are getting closer to expansion than we were before. And once the breakout occurs, it is not likely to stop in that direction. If it breaks down, it's likely going to continue down. It's not going to be like a false breakout then go this way. If it breaks up, it's likely going to continue up. So that first breakout is going to be very important here from a longer term basis for PayPal. Maybe what sparks it is an earnings report or some earnings announcement, and price gaps up to here and just starts to run. That could be huge on a multi-month basis. So this one is a big deal here. Whenever it gets below 75 or above 90, we could be looking at a big move down. If it breaks down, or a huge continuation to the upside. So this one is definitely coiling up. I've liked this space for a long time, and I'm usually quite bullish this space. So if you see my merchant services here, they usually move up and to the right. So it's hard for me not to bet higher for PayPal. So if I had to place a bet, I'd think it'd try higher and go higher. But this current market environment is quite shaky at best. So it wouldn't surprise me for it to break down. Here's Square. Oh, I'll do Tandem as well. All right, take care, Anthony. Here's Square, and then we'll look at Tandem. This one, I love Square, and it's a shame that this environment's gone, because it was so fun. now it's a bit more crazy and chaotic to the downside. I think that this one is still one that will eventually shake out and go higher. But I think what happened in the market, which is very typical of a period like what we saw here recently, is that anything that is a high flyer, up and coming high flyer that grew big quickly, they got slammed the most. You know, high beta type movers, high flyers, they got slammed the most, and so everything got hit. You see the best ones out there. This one went from 100 to 50. Nvidia, right? Nvidia getting crushed. Roku got crushed. All the ones that had doubled or more in the last year or 2 or 3 got hit hardest, and this was no exception here. I think overall, I still like this one down the road, but it just doesn't have like it doesn't have that definitive this is a low right now to work off of just yet. But it does show near-term strength that could take it back towards 70, which is not a bad move from where we're currently sitting, 60, 71. You know, that's a good enough bounce, good enough recovery of these levels, and value is still up here. That we've recovered off S3, so the short-term push is up. I just don't know about the long-term right now on that one. So this is some thoughts there on Square. Tandem, I've been very, very happy with Tandem overall. Again, this was a long-term candidate here that we've held, but again, what I've mentioned in our trading room is that still, despite my long-term thoughts that this thing can continue much higher, at some point nothing is susceptible to a market downturn if the market's weak enough, right? And if this was one of the last ones standing, then at some point it might see some selling pressure as well. So I think still with this one, protecting with puts on these bounces makes a lot of sense. But what I like about this one is the compression that it's seeing right now. Very, very clear compression. Again, building energy. Look at VWAP right here. It is perfectly flat. That is perfectly flat since October, November, December. And I think a lot of people would have loved a perfectly flat VWAP for that Q3 after how bearish it was. And especially December. December, you can see from the ES was 2,800 up here, and it hit a low of 23 and change. That's a huge move, whereas this one, it was flat to up. And that's pretty good. The only thing I see with this one is that it's flat. It either needs to take it bid and start working higher, or it's going to come back down and challenge S3 or S2 or this low. 30 bucks is the major pivot for me. It's only really been below it one day or a couple of mornings. Other than that, it's held above it. I think this still has a shot to double down the road. I mentioned before from 30 to 35, it could double to 60 to 70 down the road by the end of the year. So I still like this one quite a bit and think it has more upside ahead. I'm curious here, if you look at the weekly chart, after all these markets that we're seeing with the higher value relationship and open and close below it, this one right here has a higher value and opened and closed above it. So that's good. That's good. We'll see if it can hold. Alright, well, if no one else has any more requests here, I want to say thank you very, very much for hanging out with me this afternoon on this first monthly market outlook of 2019. A lot of great candidates to come out of this one here. The last time, I had some sell candidates in December. The big one we had was IYT as the idea, and that was a huge idea indeed. It turned out to be a killer December, but it was all based off of this pivot high off of 200. And that's one that we got out of this room here for the monthly market outlook last time. There's always a candidate or two or more that really respond to our analysis and what we do We looked at a ton of candidates today, so a lot to look at as we head into the next month and the first quarter of the year. But again, thank you all so much for hanging out with me today, and enjoy the rest of your day. Everybody have a fantastic evening. Take care.